Yes. See, this component is used to provide the information to the management for the performance analysis and the decision-making process. You take any company, there are 3 levels of management: lower level management, top level management, and middle level management. Then the middle level management is always concerned with performance analysis. Means the middle level management people comprise departmental heads. So the head of every department at the end of every month, they want to know the performance of their respective departments, how efficiently we are performing. And if any inefficiency is there, what are the reasons for that inefficiency and how to overcome those problems. So like that, every departmental head, they want to analyze the performance of their respective departments at the end of every month. For that purpose, they need some information. That information is completely provided by the controlling component. Now, similarly, you have top level management. The top level management, always they are concerned with the decision making process or strategic decision making process. Strategic decision making means taking the decisions which have the long-term impact on the profitability of the company. See, for example, we are producing 3 products, A, B, and C. So these are the 3 products we are producing and selling. This year, the management wants to increase the production capacity of one particular product. This is the decision they want to take. So it will affect the long-term profitability of the company. These are called strategic decision-making process. And here, which product they have to increase in terms of quantity. This is the decision to be taken by the top management. For that purpose, they need some information. Like what? Whether they should have the marketability for each product. Yes, we have the equal marketing opportunities for each of the product. Whatever the product you increase, that can be sold total in the market. And we have the additional production facilities to increase the production of any product. And also, we have the sufficient sales force to push up the increased production of any product into the market. Like that, all the information is available. Apart from this information, they need the most important information, that is the profits contributed by each of the product. If they know what is the profit for each of the product, then they can increase the production of that product which is earning more profits to the company, so that the profits are increased. This is the very important information they require. For this information, we cannot use the profit and loss account, which is prepared in the financial accounting component, because the profit and loss account will display the total profit for the organization as a whole. There is no legal requirement to distribute the profits according to products in the profit and loss account. The legal requirement is only to display the profit for the company as a whole. Here company means company code as a whole. But how do they get this information according to products? For that purpose, they need controlling component. So in controlling component, there is one subcomponent which is called profit center accounting. So using this profit center accounting, you can distribute or you can bifurcate the profits according to the criteria required by the management, like product groups, internal organizational units. Like that, according to any criteria, you can distribute the profit. This example is just to make you understand what is the importance of the controlling. FI component is a legal requirement. CO component is only to meet the information requirement of the management. That's why this controlling component is also called internal reporting tool, and FI is called external reporting tool, because using the FI component, you prepare the financial statements, and these financial statements are to be submitted to many external legal authorities like banks, if you have taken any term loans or overdrafts, and tax authorities like sales tax authorities, excise duty authorities, and income tax authorities. Then the most important is submission of financial statements to the register of companies, stock exchange commissions. Like that, we have to submit the financial statements to many external legal authorities. That's why this FI component is called external reporting tool and controlling is called internal reporting tool. So the lower level management, they are always concerned with the postings, that's all. They don't have any necessity for information. So that is the use of the controlling component. Here, the controlling component is always concerned with analysis of expenses and incomes. That's it. The expenses and incomes are only for profit and loss account items. We don't have anything to do with the balance sheet items, that is accounts payable, account receivable, asset accounting, for the purpose of controlling. We need only general ledger accounting. So why it is concerned with the analysis of expense and incomes? I will tell you one reason. I will tell you the reason, not one reason. I will tell you the reason. The main purpose of any enterprise, the main objective of any enterprise is to maximize the profits. With the limited resources, every company, they want to maximize the profits with the limited resources. So for that purpose, always they want to analyze the expenses to see where and how it is possible to reduce the expenditure. By reducing the expenditure, we can maximize the profits. Similarly, also they are always interested in analyzing the incomes or the revenues to see how and where it is possible to increase the revenues so that profits are increased again. So either by reducing expenditure or by increasing the revenues, we can maximize the profits. That's why this controlling component is always concerned with analysis of expenses and revenues. So where this expense and revenues information is available in the FI? In the general ledger accounting. In the general ledger accounting, we maintain the GL account for every expense account and revenue account in the form of GL accounts. Sorry, for every expense account and revenue account, we maintain the GL account. So the information of expense and revenues are existing in the general ledger accounting in the form of GL accounts. And you know that every sub-module in FI and all other modules of SAP are integrated and can be integrated with the general ledger accounting. So all other modules are used to manage different departments in the company. As a result, whenever any expenses are incurred or whenever any revenues are derived, those expenses and revenues are posted in the respective departments only. Then the respective GL accounts in the general ledger accounting are updated through integration. Means what? In the general ledger accounting, the total information of the expenses and revenues of your company code are available. So from the general ledger accounting, the information is taken to controlling for the purpose of analysis. This is the data flow. You see, just observe the arrow directions. Asset accounting is integrated. Already we have seen how the asset account is integrated with the general ledger accounting. Yes, only through FIGL accounts. Without general ledger, you cannot implement controlling. Then we have the plant maintenance. We have the SD, production planning and control, HR, like that. This is called data flow. For that matter, without general ledger accounting, there is no SAP. Not only SAP, there is no any other ERP. So here we have to understand one concept which is called controlling object. It is the entity for which the information is maintained in controlling. Means what? If you remember or if you have observed, in the general ledger accounting, we have posted the business transactions with reference to GL account master record. In the accounts payable, we have processed the purchase invoices, payments, right? Then bank transactions, etc., etc., with reference to vendor master record. Similarly, In account receivable, we have processed the business transactions with reference to customer master record. In asset accounting, with reference to asset master record. Like that, in controlling also, there should be something with reference to which we can maintain the information of expense and revenues, and we can process that information of expense and revenues. Without that something, you cannot maintain any information and you cannot process any information. That something is called controlling object. So the controlling objects are already defined in the system. We cannot maintain our own controlling objects. It's very, very important. We cannot maintain our own controlling objects. So the system maintains the information for each controlling object through primary cost elements and secondary cost elements. So what is the primary cost element and secondary cost element? We will discuss in cost element accounting. So here, these are the controlling objects defined in the system. Cost center. Cost center is a controlling object. For this, we maintain the information of expense and revenues, and we process the expense and revenues in the cost center accounting. This is the first module. So in the cost center accounting, we will see what is the cost center, what is the need for the cost center, how do we process the information for the cost center, and how the cost center reports are useful to the management, and also all the configuration settings. All these things we will discuss in the cost center accounting. Then internal order is another controlling object. So for the internal order, you maintain and process the information in the internal order accounting. See, in controlling, remember that information means always they imply expenses and revenues. Then we have another controlling object, cost object. So for the cost object, we maintain the information in the product costing module. For profitability segment, profitability analysis. Then profit center accounting. Then projects is outside the purview of controlling. There is another module which is called project systems. For the projects, we maintain the information in the project systems. It's a separate module like FI and CO, MM and ST. So we are not going to touch the projects here, project systems here. So your 5 modules are, I will give you. See, the 5 modules are cost center accounting, internal order accounting, product costing, profitability analysis, and profit center accounting. So for all these 5 modules, there is one base module, cost element accounting. Without cost element accounting, we cannot configure for any other module in controlling. Through cost element accounting only, every controlling object gets the information of expense and revenues. So cost object means, let me see the question posted by Kiran. Can you give some detail on cost object? Okay. See, first of all, cost object means it is the entity for which you can find the cost and you can control the cost. That is the meaning of the cost object. See, cost object means it is the entity for which you can find the cost and control the cost. See, controlling the cost means looking into the avenues where it is possible to reduce expenditure. That is the meaning of controlling the cost. Looking into the avenues where it is possible to reduce the cost by reducing the expenditure. That is called controlling the cost. So there are many types of cost objects, right? For example, a manufacturing order can be a cost object. Manufacturing order or production order can be a cost object. Means a production order can be taken as one unit for which we can find the cost. In the real-time organizations, as all of you or most of you know that, for every activity, there should be documentary evidence. Let us say our company is LG company. So the production manager, today, he has issued one order to the production supervisor to start producing 1000 refrigerators of 500 liters capacity each. This is called production order. So this production order contains what? The production of 1000 refrigerators. So all the 1000 refrigerators can be taken as one unit for which we can find the cost. I hope it is clear to everybody. Then number 2, sales order. Sales order can be taken as a cost object. Means, for example, we have got an order from the governmental agency. We have got the order from the governmental agency for the supply of these items, like 1000 refrigerators, then 1000 washing machines, then 1000 TVs. This is the order you have got from a governmental agency or from external third party. This is called sales order. So the total sales order can be taken as one cost object, or the total sales order can be taken as one unit for which you can find the cost. Why do you want to find the cost of the sales order? I will give you the reason. See, we did not get this order very easily. You had to participate in the tenders. So there are many other companies who are participating in the tender. So the governmental agency will give the order only to the company which has quoted a very least price. So we have quoted the least price. That's why you got this order. Okay, fine, good. But the management is very much worried about the profit. At the time of quoting, okay, we have quoted a very least price, but management is very much suspicious that whether this price is correct or not. That's why it wants to know whether we have done the profit or loss on this particular order. So in order to know what is the profit or loss made on this particular order, first we should find the cost, no? That's why the total sales order can be created as one unit, or the total sales order can be considered as one unit for which you can find the cost. So the sales order can be a cost. No, you don't need any historical data, right? Let us discuss. Let me complete this first question. The answer to your first question is not yet completed. Now, Kiran, are you getting my point? Yeah. So a sales order can be considered as a cost object. Then a sales order item also can be considered as a cost object. Sales order item means what? This is the sales order, right? In this is the first item, this is the second item, this is the third item. In order to find the total cost of the sales order, first of all, you have to find out the cost of the 1000 refrigerators, order item number 1. The cost of 1000 washing machines, item number 2. Cost of 1000 TVs, item number 3. So each item of the sales order also can be taken as a cost object. Yes, Gabish, you are right. The sales order generates the revenue, right? So how do you know the profit on that particular sales order? You compare the revenue with the cost of that sales order, right? That's why first we have to find out the cost of the sales order. Then that sales order cost is compared with the revenue of the sales order. Then you can find whether you have got the profit or loss. Clear? Okay. Now, Sindhu, we need find the, yes, we have to first of all find the cost of each item in the sales order. Then you sum up the cost of individual items, which gives you the sales order cost. Okay, Sindhu. So these are the examples for the cost object, right? Now, another question posted by, look at the question posted by Kiran. You need, that means you need historical data to find the cost of current order. No. What exactly happens is, in the product costing, we have the two components. Cost object controlling, product cost planning. First one is product cost planning. Next one is cost object controlling. So in the product cost planning, you find out the estimated cost of the product for each unit of the product. In the product cost planning, we can find out the estimated cost for each unit of the product. This is what exactly we do in the product cost planning. Then in the cost object controlling, whenever you get the sales order is created as one cost object. Then based on the sales order, suppose for example you got 1000 units. So whenever you create the order for this sales order with 1000 units, from the product cost planning, the system takes the estimated cost. The system takes the estimated cost, multiplies it with the quantity of the order. It gives the planned cost of the order. Then you will be going on allocating expenditure with the cost object. Then that will be the actual cost. That will be the actual cost. Then the difference between the actual cost and the planned cost is the variance, which is called production variances. Then these production variances are to be settled to either the sales order or the production order or the finished goods stock based on the scenario. This is what exactly happens. We don't need any historical cost data. Kiran, clear? Yes. Exactly. Integration of project systems with controlling component, right? Like WBS element, work breakdown structure, network activities. So these are the elements through which project systems is integrated with the controlling component. Now, the controlling object receives the information from every module. What is that? Almost all from every module, this controlling object receives the information. Raw material consumption from the metals management. Most of you know that there is one module, metals management. Using this metals management, we can process the raw material procurement activities, inventory management activities, material issue activities. So all the activities are the business transactions relating to no, I'm sorry. I lost the link. What is the question posted? But do you teach PS also? No. I teach only FSCM and FSCO. I know a little bit, right? In PS, not the whole thing. I'm not the PS consultant as such. Yes, FSCM, Financial Supply Chain Management. Okay, let us come to this FSCO, right? Let us come to this CO. Yeah, see here, using the metals management module, you can process the business transactions relating to materials. Here, materials include raw materials, work in progress, finished goods, packing materials, then stores and spares. So every material is business transactions are processed from MM. So when you have implemented MM, materials are procured from MM, materials are issued to production from MM. So when the MM end user issues the material to production, that is entered by the MM end user in MM only. Then through the process of integration, the relevant GL account raw material consumption in the general ledger accounting is updated through the process of integration. When the material issue is posted in MM by the MM end user, the respective GL account in FI raw material consumption is updated. Means what? What is the original birthplace of the raw material consumption? Materials management. So from the materials management, raw material consumption is updated in the general ledger. From the general ledger, that information is taken to the controlling ultimately. So through MM, raw material consumption is taken to the controlling through general ledger. That's why we say that raw material consumption is taken from materials management. Not only raw material consumption, all the expenses incidental to material procurement, like inward freight, like input taxes, everything, every expense which is concerned with the materials procurement are also taken from materials management only into general ledger. From there, it is taken to controlling. No, MM to general ledger to CO. Then depreciation from asset accounting. So when you have executed the transaction code AFAB, in asset accounting you have seen the depreciation account is updated in the general ledger, and the depreciation amount is transferred to controlling for the purpose of analysis. Then revenues and sales deductions from sales and distribution module. When you have implemented SD, the invoices are raised in SD, and as a result, the sales revenue account is updated in the general ledger. From there, it is transferred to controlling. And other expenses which are incidental to your sales process, like output taxes and trade discounts. Sometimes what happens is, when the customer gives the payment along with the order, you give some discount. That discount is called trade discount, which is reduced from the invoice itself. And sometimes you pay the freight up to customer's destination. So all these are the expenses incidental to your sales, which are called sales deductions also. So all the sales related expenses are also taken from sales and distribution to general ledger, from the general ledger to the controlling component. Then production information is transferred from production schedule, production planning and schedule module. Then repairs and maintenance cost is taken from plant maintenance. Like that, every module contributes the information to the controlling. Means the controlling component gets the information from almost every module. Then what is taken from FI? All the expenses, other than the expenses you have discussed above, will be taken from FI only. These other expenses are called overheads. This is the most confusing concept in the total controlling. Yes, not only depreciation, every expenditure will be generated first in the respective modules. From those respective modules, it will be taken to the general ledger through integration. From the general ledger, it is transferred to controlling. You need not think anything else. Every expense will be incurred in the respective modules. They are posted in the respective modules. Then through integration, the respective GL accounts are updated in the general ledger. From the general ledger, the information is taken to controlling. Right? Now, so all the expenses other than the above will be taken from FI general ledger directly. All these other expenses are called overheads. And this is the most confusing concept in the total cost accounting itself. Even the real-time CO consultant sometimes gets confused regarding the concept of overheads. Everything, Abhi. PS to general ledger to controlling. Yes, I am going to explain the overheads now, right? Whether you ask it or not, I would give you the explanation of overheads for half an hour. Don't worry about it. That is the next one only. Yes, yes. You are running faster than me. So, that's why for our controlling purpose also, we have to understand the concept of overheads. If you understand the concept of overheads, right, controlling is very simple, right? See, just put one heading. Now I am going to discuss the overheads from the academic point of view, so that you can understand the SAP controlling very simple. Put heading in the notes. Note. The purpose of the cost accounting is to find the cost, the purpose of the cost accounting is to find the cost and to control the cost. So these are the main primary purposes of the cost accounting, right? Keeping these two objectives in view, let us try to understand overheads. Here, you take the cost of any product. Broadly, it contains three components. Number one, material cost, then labor cost, and other expenses. So, the material cost is everything I will explain. Listen to me very carefully, right? All your doubts will be clarified. See, the cost of any product will contain mainly three components: material cost, labor cost, other expenses. Then again, material cost is divided into direct material cost, indirect material cost. Similarly, direct labor cost is divided into, labor cost is divided into direct labor cost and indirect labor cost. Similarly, other expenses are divided into direct expenses and indirect expenses. Now you have to understand what is the direct material cost, indirect material cost, direct labor cost, indirect labor cost, direct expenses and indirect expenses. What are these elements? Why you have to bifurcate between these things? That is the main important thing what you have to understand. In this case, the sum of the indirect material cost, indirect labor cost and indirect expenses is called overheads. Okay, that's fine. But what is direct material cost and what is indirect material cost? Why you have to differentiate between these two? That is very important. Direct material cost. It is the cost of the material which satisfies the following two conditions. Number one, the material should be directly identified with any product or service or department. Number two, the cost of that material should occupy the larger portion of the cost. Any material which satisfies both the conditions, remember, both the conditions it should satisfy, then that material is called direct material. And the cost of that material is called direct material cost. I will give an example also. Then indirect material cost. It is the cost of the material which satisfies only one or none of the above two conditions. Is called indirect material cost. I will give an example. You take computer table. I am talking about traditional computer table in India. I am not talking about the high-tech computer tables. See, you might have seen the traditional computer table. What are the materials we are using to manufacture that computer table? Wooden planks, right? Then that wooden planks are fitted in between the iron frame. So you require iron frame. Then we require nuts and bolts. So these are the three materials we are using. Now you take the cost of the wooden planks. First, let us take the cost of the wooden planks. By just measuring the size of the wooden pieces, you can say how much of the square feet of the wood we have used in the manufacture of that computer table. So, first condition is satisfied. Material should be directly identified with the product or service or department. Then, the cost of that material should occupy larger portion of the total cost of the product. Means, if you consider the cost of the wooden planks will occupy minimum to minimum 20 to 25% of the total cost of the computer table. Suppose if the cost of the computer table is $100, the cost of the wood will be at least $25 to $30. So, second condition is satisfied. Now, the material wood is satisfying both the conditions. It is called direct material cost. Now, you take iron frame. So, within the iron frame, we fix the wooden planks, right? So, by just measuring the length of the iron frame, we can say how much feet of the iron frame we have used. First condition is satisfied. Then, when you compare the total cost of the iron frame with the total cost of the computer table, it is also occupying some larger portion. It will also around 20 to 25% of the total cost of the product. So, the iron frame is also satisfying both the conditions. So, the iron frame is also called direct material cost. Now, coming to nuts and bolts. See, by just counting, we can say how many number of nuts and bolts we have used. We have used 20 nuts, let us say. So, first condition is satisfied. Now, what will be the portion of the cost of the nuts and bolts when you compare to the total cost of the product, $100? Hardly we might have used the nuts and bolts worth of $2. Only $1 or $2. So here, the cost of the nuts and bolts is not satisfying second condition. In this case, the cost of nuts and bolts is called indirect material cost. So, if any material satisfies both the conditions, direct material, otherwise indirect material. You take the shirt. One more example. Cost of the cloth is direct material cost. Cost of the thread is indirect material cost. Cost of the buttons is indirect material cost. I hope everybody is following. Then you take the shoe. Cost of the leather is direct material cost. Cost of the sole is direct material cost. Cost of the lace is indirect material cost. Clear? That's how we have to decide whether a material cost is direct material cost or indirect material cost. But why? Why you have to differentiate like this? See, we are operating in the furniture market, right? So there is a lot of competition. So your competitor has reduced the selling price. So we are also forced to reduce our selling price. Otherwise, what happens? Your sales will drop down. So you lose your profitability. As a result, market share will be disturbed. As a result, net worth of the shareholders will be decreased. So even though you have reduced the selling price, you should see that the profit should not fall. In that case, what is the alternate? To analyze the expenses. So expenses contains material cost. Again, material cost includes direct material cost and indirect material cost. And from our discussion, if you have noticed, direct material cost always occupy larger portion. And the indirect material cost always occupy smaller portion. See, the cost of the wood is higher portion, cost of the iron frame is higher portion, cost of the nuts and bolts is very low portion, only $1. So, direct material cost occupies always larger portion. That is why first you have to concentrate your analysis activities on the direct material cost. By just changing the design, of the computer table, you can save at least half a feet or 1 feet of the quantity of the wood you require, so that the total cost of product will come down. But if you concentrate on the cost of nuts and bolts, how many nuts and bolts at the most you can reduce? One nut or one bolt. More than that, if you reduce, it will not stay on the ground. So in that case, what is happening? The cost of analysis is more than the benefit of analysis. That's why at this point of time, it is not feasible to analyze indirect material cost, but you have to analyze direct material cost. That's why you have to differentiate between direct material cost and indirect material cost. Now, I hope it is clear to everybody. Now, coming to labor cost. Again, labor cost is divided into direct labor cost and indirect labor cost. So, what is the direct labor cost? It is the remuneration or salaries paid to the people who actually engaged in the process of production and whose portion will occupy the larger portion of the total cost of the product. Means what? Suppose, for example, okay, before that, I will show you the indirect labor cost also. I will read the indirect cost also. It is the remuneration paid to the people who assist in the production. See, I have not touched the labor, right? Just now I have touched the labor. Now I will explain. Right? Oh, I'm sorry, I did not notice your first question. Here, there is no percentage border. There is no percentage border, right? It's only a discretionary analysis of the costing department. Right? There is no, you can't say that if that cost occupies this much percentage, this is the direct cost. You can't say like that. Okay, Gabi? Right? Now, coming to labor, let us discuss the labor cost. Right? See here, indirect labor cost means it is the remuneration paid to the people who assist the production. For example, we have one department in which we are producing computer tables. We have 10 workers. Each worker is producing a table a day. And for each worker, we are paying $50 as daily wage. So these 10 workers are directly engaged in the production. They're cutting the wooden pieces and they're cutting the iron frames and they're doing the polishing. They're fixing the wooden pieces in the iron frame. They're doing the polishing. They're fixing the nuts and bolts. Like that, every worker is physically engaged in the manufacture of the computer table. So they are directly engaged in the table manufacture, and also the salary we are paying is how much? $50 a day. Each worker is producing a table a day. So $50 is the labor cost per table. It is the direct labor cost. Now, in order to supervise the work of all these 10 workers, we have one supervisor. And for the supervisor, we are paying a salary of $1,000 a month. And he is not actually putting his hands physically in the production. He is just supervising the work of 10 workers. So he is looking into the production process going on smoothly. That's why the salary paid to this production supervisor is called indirect labor cost. And the indirect labor cost per unit is also very low. We have 10 workers in computer manufacturing department, right? 10 workers are producing 10 tables a day. Then we have the 25 working days. So what is the total output per month? 10 into 25, 250 tables. Then what is the salary we are paying to production supervisor? $1,000. $1,000 divided by 250 tables total output, $4 per unit table. So keeping a very smaller portion. No? That's why this is called indirect labor cost. Now, again, so direct labor cost occupies larger portion. So you have to analyze. But indirect labor cost occupies very smaller portion, and it's not. That's why it is not feasible to analyze the indirect labor cost. Here, you have to design your manufacturing process in such a way that how to make 10 people produce 11 tables a day. Presently, what is the total output per day? 10 tables. But how to make this 10 people produce 11 tables a day? This is how they want. It is the headache of the management. That's all. But this is the way where you can reduce the expenditure. That's why direct labor cost occupies larger portion, indirect labor cost occupies smaller portion. So it is not feasible to analyze indirect labor cost as such. So there is no any fixed percentage whereby you can decide that if the cost reaches this percentage, you can say it is larger portion. You can't say like that. It's only subject to decision. No, I did not come across in my life, in my experience till now. Right? Now, coming to other expenses, direct expenses and indirect expenses. Direct expenses means these are the expenses other than material and labor, which can be directly identified with the product or service or department. For example, in order to manufacture the computer table, we require some technology, and the technology is not available in the market for the outright purchase. So we have made an agreement with the vendor of technology to pay $15 per table you produce. We have made an agreement with the vendor of technology to pay $15 per table you produce. This is called royalty. This is called royalty, right? This is not the labor cost. This is not the material cost. But it is directly identified with the table. Per table, how much? $15. This is direct expenses. Indirect expenses. All the expenses which cannot be conveniently identified with any product or service or department. Let us take about the product. Printing and stationery. We are producing 100 products. And every department is using some printing and stationery. With which product you identify this printing and stationery? Traveling expense of the employees. Depreciation on the office furniture. With which product you identify? No, it's not possible. This type of expenditure is called indirect expenses. So again, coming to the analysis perspective, direct expenses occupies larger portion. In our case, royalty. Now, you have to bargain with the vendor saying that, sir, we have been paying you lots of money as royalties since number of years. This year we are facing very tough competition in the market. So if you could reduce $2 or $3 as a royalty, we will be able to survive. Otherwise, we have to go closing down our organization. Then you lose the total royalty itself. So if you want to survive, please let us also survive. That's why please reduce the $2-3 per table as a royalty. That's why you can bargain, no? I'm just giving the example. That's why it is necessary to analyze indirect expenses. We have to analyze indirect expenses. But it is not feasible to analyze indirect expenses individually. Now, from the analysis, what is the conclusion? We have to analyze direct material cost, direct labor cost, and direct expenses because they are occupying a larger portion. But it's not feasibly to analyze individually indirect material cost, indirect labor cost, and indirect expenses because they occupy smaller portion individually. But if you combine, if you sum up the smaller portions of these individual components, it becomes larger portion. If you sum up the portions of these individual components, they become larger portion, right? Means if you combine indirect material cost, indirect labor cost, and indirect expenses, it occupies larger portion. It becomes larger portion. This is called overheads. The sum of the indirect material cost, indirect labor cost, and the indirect expenses is called overheads. These overheads are directly taken from FI general ledger. This is the meaning of overheads. And the overheads are classified from many perspectives. One is behavioral perspective. Number two, functional perspective. And other perspectives are also there. They are not material for us. So, again, in this behavioral perspective and functional perspective is very important. This is called functional classification of overheads. Based on the functional classification of overheads, we classify the overheads like administration overheads, factory overheads, sales and distribution overheads, and research and development overheads. This is called functional classification, and this is the concept of overheads. Right? Now, for controlling also, you have to maintain organized structure. Just we have maintained the organized structure or enterprise structure for F5. Not 5, only 4. Administration overheads, factory overheads, sales and distribution overheads, and research and development overheads. Theoretically, I am talking about theoretically. But when it comes to practicality, right, research and development overheads may not be there. When you don't have the research and development department, when you don't have the research activity, there is no overheads relating to research and development. Okay, Gabish. So tomorrow we start the enterprise structure and the configuration settings for controlling, right? And the material which I have sent to you includes material up to cost element. It includes the materials, cost element accounting, cost center accounting, and internal orders. Right? Yes, we have the class. Only 1 hour now. Yeah. Okay then, right? If you have any questions. It will be around, I think, 20th of December. This we will discuss tomorrow's class, Abhishek. Right? In the case of service providers, we will discuss tomorrow.
Sir, this is Kiran here. Can I ask you a quick question?
Who is this?
Sir, Kiran Katla.
Yeah, tell me, Kiran.
Sir, you mentioned that everything flows from FI to CA, which I'm clear. from SD, from HR, PP, that I understood. But you said overheads, they will flow apart from this integration, directly from FIGL accounts.
Exactly.
So I'm not clear after the explanation. That for overheads, do we have separate GL accounts, or I mean, how is the cost flowed?
No, the GL account should be there. Suppose printing and stationery is there. For printing and stationery, we maintain the GL account in the general ledger.
Okay, so that is independent GL account which is not related to any of the function modules.
Exactly.
Oh. Right. I think I got it. Okay. Okay, sir.
Okay. Okay, then see you tomorrow same time. Yes, Gabish, I will send you the details of FSCM. Okay then. Good night and good day.